Welcome to Insight. I'm Sherian in Seoul. The top stories this hour. Asian investors staying on the sidelines ahead of U.S. inflation data that may influence the Fed's thinking on a possible rate cut next week. China begins its annual economic work meeting today as investors await more concrete measures to back up bold pledges on monetary and fiscal stimulus. Plus, we take a closer look at the intensifying feud in Philippine politics as threats of violence stoke domestic instability and distract from growing international tensions. Asian shares right now treading water as traders await key U.S. inflation data for clues on whether the Fed will cut or hold interest rates next week. The dollar under pressure after 3 days of gains. South Korean equities rising for a second session, continuing their recovery after last week's short-lived martial law event that's thrust the country into political turmoil. Now, stocks in Hong Kong and the mainland also in focus. Of course, we have seen China now beginning its annual economic work meeting today to map out policies for next year. And this, of course, after the Politburo earlier hinted at more forceful stimulus, this as Beijing braces for potential trade war with the U.S. We really haven't seen that much of a global market reaction to that, but our chief North Asia correspondent, Stefan, is with us with the latest. We saw that shift when it comes to the tone, when it comes to supporting the economy. What more concrete measures can we now expect from the World Economic Conference?
Well, you know that there are going to be concrete steps taken and a lot of debate going on behind closed doors starting today and then running through tomorrow at this Central Economic Work Conference being held in Beijing. This is an annual event in December that essentially takes its marching orders from the Politburo, the 24 top party leaders, including Xi Jinping, which had their closed-door meeting on Monday. They gave the marching orders to the Central Economic Work Conference to come up with the agenda and the priorities and the goals for the National People's Congress in March. That's when we'll likely get details. But given the urgency, if you will, as expressed in the markets and investors, given the slowing Chinese economy, continuing slowing Chinese economy, as well as the threat of Trump tariffs, there could be some sort of communique coming out at the end of the conference by tomorrow to kind of put some meat on the bones from what we got on Monday from the Politburo, where they pledged, and their tone was very encouraging as far as pro-growth strategies and policies. A moderately loose monetary policy going forward in 2025, so we could see interest rate cuts. They're also talked about proactive fiscal measures. We just don't know where and how deep and how much fiscal spending there will be, whether they will lift the fiscal deficit to ranges we haven't seen in 4 decades to pay for this, and whether there's going to be some central government bond issuances to help pay for that. And what will they do specifically to forcefully, its words, spur consumption? Because if the exports are going to be hit by tariffs, they really do need to boost domestic demand.
And that's the thing, right? All of the uncertainty surrounding China and perhaps also a so-called promise fatigue. Why we didn't see that market impact last longer?
Yeah, it didn't last very long, did it? You can see on the Golden Dragon Index of ADRs in the United States, after an 8% pop upwards the day before, it fell back 4.5% overnight. And also yesterday, you saw not only the Hang Seng Index and the 8-share index here in Hong Kong open 3% higher. The CSI 300 in Shanghai and Shenzhen also was up 3% to start. All of them pulled back those gains by the close. In fact, Hong Kong closed lower yesterday. Again, there is a little bit of policy fatigue. Sure, there might be some profit taking. Sure, there might be some expectations or maybe a pause ahead of that key inflation data out of the United States. But you're right. The momentum did not last long. Like in September, when we had the first batch of more concrete stimulus measures and then nothing really until more recently. That's why there was some promise fatigue in the market when the expectations were higher than the reality. So again, maybe we should be urging caution for the international investors who do not necessarily understand the way the Chinese government communicates its policy directives. They will send out more vague policy direction and tone. They'll set the tone, which the Politburo did, and then they will reveal those normally at the annual session of Parliament in March. So maybe we'll get something tomorrow after the close of the conference. Maybe not.
Yeah, I mean, investors were already warning of this. Sell the news, perhaps, after the results of that conference. Bloomberg's chief North Asia correspondent, Stephen Engel, there. Let's actually bring in Stefan Hofer, his MD and chief investment strategist with LGT Private Banking Asia, and joins us from Hong Kong. Stefan, good to have you with us. What will it take for you to become more constructive on China?
So I think we have to sort of monitor the response, but first the extent of the tariffs, which may come through from Donald Trump, and see how heavy, how severe those are, and what China can do about it to cushion the blow. But really, what we're looking for at the end of the day is a much bigger issue, which is the housing market. So if you look at the 70-city average across China, prices are still quite weak. That, of course, has a negative effect on household balance sheets in China. If that begins to sort of stabilize and prices can actually move higher, that will really change the calculus in terms of what you can expect from the Chinese consumer, both domestically, which is important, but also, when we think about the rest of Asia, externally as well. So tourism flows to places like Thailand and whatnot have really been hampered by that diminished confidence.
In the meantime, until we see that recovery in the housing sector, is this just going to be a dead cat bounce, despite the fact that we continue to see these announcements from policymakers?
I think really, the way to do this in terms of investing in China now is on a bottom-up basis. There are still some fantastic, very domestically oriented large caps in China, which, hopefully can sort of shrug off some of the negative sentiment that will come with tariffs. But I mean, really, the situation is very dynamic. Maybe on a positive note, the tariffs will be less than anticipated, and we get a nice rally that comes off the back of that.
How much will pressure on the Chinese yuan hurt some of these companies, though, because we continue to see a very resilient dollar?
Yes, that's absolutely right. So much of the Trump platform, at least in terms of how it stands right now, is really pro-dollar, and that impacts not just China, but really the rest of Southeast Asia. A lot of emerging market currencies will be pressured downward because of that. Our view on the renminbi is more sort of a sideways movement, maybe a little bit of depreciation. We don't think there's a major downside to that currency, because that ultimately would be counterproductive and probably put more pressure on capital outflow. So for China, it's a delicate balancing act, but we don't think you're going to see a competitive devaluation of the renminbi as some kind of countermeasure to the tariffs.
You're saying that you would prefer to really invest bottom up, right? Look at individual companies. So some of those sectors that you mentioned that are more domestic focused, what are they? And are these big tech giants also in China performing as well as we had expected for 2024?
2024 was hands down a very tough year for China. That's impacted, all great companies across the board. But at the same time, there's been a cumulative support both on the monetary side and now on the fiscal side that really should set a bottom for the market. So the major tech giants in China would be our most preferred stocks for those investors that really want to look for some cheaper valuations in their emerging market portfolio.
How important is China right now in the broader EM complex? Because we have seen sort of that weight wane given the concerns surrounding the Chinese economy, not to mention, of course, some of that flow also going to India.
Yeah, I'm not so sure about that. I think China still is extremely important. First, when we think about the interconnectedness of supply chains across the region. So, if you get, punitive tariffs from the United States against Chinese exporters, supplier companies, be it in Thailand, be it in the Philippines, be it in Taiwan, will feel that too. So, this is the investment in China's story is not just about the stocks that you can buy, but it also has broader implications for the rest of the region. So we're really very hopeful at this stage that those tariffs, if and when they do come, will be not as bad as we anticipate. And really what you're seeing right now is a lot of bargaining rhetoric And at the end of the day, we'll find out on January 20, after the inauguration, where we stand with that.
Yeah, I mean, it seems that President-elect Trump is already setting the groundwork, threatening more tariffs, additional tariffs on China. But given, of course, the uncertainty, does that mean that we're just headed towards more support for the Chinese bond markets? I mean, that rally has been incredible this year.
Yes, indeed. I think that does make sense. And we're also going to have to see what happens with China's banks, whether there's going to be further recapitalization. But really, the pillar that everything is bound by is the housing market. That's important not just in terms of domestic economic activity, but investment, and also ultimately the household balance sheets, which really have taken quite a hit in China.
Stefan, Hofer, good to have you with us. You're staying with us for the next conversation. MD and Chief Investment Strategist at LGT Private Bank Asia. Coming up, we'll get insights into the deepening rift between Manila's top leaders from University of the Philippines Assistant Professor Sol Iglesias. Much more ahead. This is Bloomberg. Welcome back. Indian stocks have experienced an unprecedented winning streak. Despite the recent pullback, the Nifty is set for another annual gain. It has benefited from China's waning influence in global markets. But this could be put to the test next year. Bloomberg's Avril Hong joins us now for a look at the challenges ahead. Avril.
Yeah, Sherry, India's Nifty is set for yet another winning year. It's been quite a streak, so it's headed for a 9th year of gains. And it's worth noting that this is a market that has braved everything from the Adani scandal to a crackdown on small caps and these concerns about rich valuations as well. But more recently, it's pulled back from the September peaks for the year amid concerns about slowing economic earnings growth. We've also seen how the rupee has been hitting lows against the greenback recently, another challenge for stock market investors. And as one portfolio manager put it, the opportunities in India do not look very juicy at the moment. If you flip the board, I wanted to put things into further context for you because this winning streak is really on the back of this corporate earnings boom in the country. Look at how it's been faring since 2009. But if you look at the metrics more recently, it's sputtering. Some of them, including the earnings revisions ratio, according to Bloomberg Intelligence, that's now as low as China's. We still have some Wall Street banks, the Morgan Stanleys and the Goldman Sachs, that think that this rally in India can continue because of a quickening in government spending and rural demand, and the change of leadership at the RBI might also bring in a less hawkish stance from the central bank that could be helpful for stocks. But this is what we're seeing, the state of play for India stocks. Sherry?
Right, Avril Hong there. Let's bring back Stefan Hofer from LGT Private Banking in Asia, in Hong Kong, joining us now. Thanks again for sticking around. Let's talk a little bit about India. What are your views there, especially given the challenges that Avril just mentioned? Not to mention that some people were even saying, you know, the whole Gautam Adani saga being charged with fraud in the U.S. might pressure the broader markets as well.
Okay, I mean, the points just raised are absolutely valid, in particular, long-standing concerns about the valuation levels in India, which are, I think we can put it bluntly, are fairly stretched. At the end of the day, though, it is absolutely a case of strong earnings growth, which is paramount. And on top of this, the infrastructure boom that has been rolled out over the last, say, 2 to 3 years means that India has really moved up the ladder in terms of airports, seaports, highways, railways. All of that vital infrastructure is unleashing a boom in economic activity. It is coming, of course, from a fairly low base. I think we can say that relative to the infrastructure levels that exist in China. But ultimately, investors care about the change, the delta that you see in terms of those aspects in India. So I think we can set aside, tactical, more short-term worries and really look at the big picture, which is that India's growth rate, potential GDP growth rate, is moving higher, and that's something relatively rare these days.
Yeah, I mean, you mentioned that comparison to China. Is that narrative correct, that India has been appealing to some of those investors that wanted to hedge from exposure in China, and could that continue in 2025?
I'm kind of cautious on those kinds of narratives. I think what is interesting about India is right now it's ticking a lot of boxes. So it doesn't have a large trade surplus with the United States. That means if we stick with what the Trump team is thinking, you're not going to get a lot of trade tariff discussions focusing on an economy like India. So that helps a lot. That helps also other, call them idiosyncratic plays like the UK market. So those kinds of things, at least at the beginning of the year, do put India in a positive light. Short term, there are issues, of course, and valuations are a very important risk disclaimer. But the growth rate is quite impressive. We can't get away from that.
Do you think that growth rate will be supported by the incoming RBI Governor, Sanjay Malhotra?
I think it's not a headwind to the growth rate. The growth rate itself is coming from the successful completion of very large, very important infrastructure projects, which the Modi government has a very good track record on delivering. And then it's about, growing manufacturing in India. This is an area where China is hands down the world leader, but India can catch up. And it's about catching up that investors like to see.
Stefan, of course, we cannot forget we have still U.S. CPI coming up overnight, and this is such an important figure for where the Fed goes from here. How big of a market reaction, market catalyst do you think this will be?
It's important because it's the last item on the to-do list for the Fed to look at before the FOMC next week. We had a fairly neutral, let's call it, non-farm payroll out on Friday. Overnight, we also had the National Federation of Independent Businesses sentiment indicator, which shot up, I think, the highest on record because of small businesses feeling that they're going to get an easier ride under the Trump administration. All this put together on a net basis, we think that unless there's a major shock tonight, you're going to get 25 basis points from the FOMC next week.
Oh, wow. Do you expect that to have a little bit of downside pressure on the U.S. dollar? I mean, that rate differential, especially with the Asian economies, has been a little bit of a headwind for Asian currencies throughout the year.
Absolutely. I think that's an important point. But I think also more broadly, we're going to move away from short-term Fed decisions relatively quickly after December is over. I really have to start to ask, bigger questions, namely, if a lot of these policies come through from President-elect Trump, is that going to create inflation down the road? And our feeling is that if you take it at face value, the answer is yes. That means maybe in the second half of 2025, the Fed will maybe stall rate cuts, worst case scenario, even increase them again.
Oh, wow. You think the Fed could eventually have to backtrack on its easing cycle? What would that signal to the market?
This is the million-dollar question. I mean, if you have massive deregulation, income and corporate tax cuts, plus tariffs, and all of this put together, I don't think you can say that with a high degree of certainty that this is going to be disinflationary down the road. And the Federal Reserve is legally mandated to pay attention to this. So it could be a choppy market in the second half. The first half should be a little bit easier. We still have easing on the cards there, but later on, CPI may change again.
Of course, we are already seeing that easing cycle and that narrative very much on hold in Europe, and which is why you're seeing that huge euro-pound sort of dynamic play out, right? Do you expect euro parity with the dollar at some point sooner rather than later? And what does that mean for sterling as well?
So euro dollar parity, we're not that far away from that as it stands now. We think that's relatively realistic. It's, you know, in the second half of 2025 by the latest, you're going to see parity on euro dollar. Europe, you know, yes, there's going to be more rate cuts, but what the European challenge is unfortunately much deeper than just monetary policy. There's been a very tragic stalling of productivity growth in Europe relative to the United States. And when, you know, although we may have issues with inflation and whatnot, at the end of the day, the U.S. economy is so much more productive than its peers. That's probably where you're going to get the earnings growth, and that's probably what investors will be focusing on, at least for the first half of 2025.
So much more productive than peers, just like Japan as well, right? Do you expect a BOJ rate hike next week? Can it happen given the weakness of the yen?
So this is actually a very controversial topic. Our view here is that the BOJ has to maintain a hawkish rhetoric, but if they were to hike, you may see hike rates. You may see a very sharp reappreciation of the yen, carry trading unwinding, and so on. And that is not something that we think they want to do, in fact. So ultimately, our best guess is that the BOJ talks a hawkish script, but actually does nothing, and avoiding to rocking the boat anytime soon. That would probably be the best outcome for Japan and Japanese assets near term.
To be fair, a lot of people seem to be guessing at this point where the yen goes from here. I mean, it seems to be a coin toss at this point, but what's certain is that with the Japanese yen weakening so much, competitors across Asia, especially here in South Korea, seem to be taking a hit. Given the political standoff that we continue to see in Seoul as well, what are your expectations for the Korean markets?
Yeah, this is very true. From time to time, in particular Korea, policymakers or the authorities voice concerns, and they say, hey, this is to our detriment that you have this massive yen depreciation, and we're paying for it now. I think, more broadly, we're going to have to wait for the dust to settle completely in Korea before we, can make any further comments about that. But also, the Japanese yen, let's say at 160 against the U.S. dollar, Ministry of Finance and others will say to you that that is actually too cheap a currency also for Japan, and that it's damaging the economy also. So ultimately, a level of, say, 145, higher, maybe 150 is okay, but anything in the neighborhood of 160, you're going to probably see the Ministry of Finance instruct the Bank of Japan to intervene.
Yeah, to be fair, not just the Ministry of Japan's Finance Ministry, it's also households that are suffering, right? Stefan Hofer, it's really good to have you with us, MD and Chief Investment Strategist at LGT Private Bank Asia. As we continue to watch Asian markets across the board, a little bit of a muted market trading today, given, of course, that we are still awaiting U.S. CPI numbers. Coming up, we take a closer look at the war of words between the Philippine president and his deputy amid allegations of death threats and moves to impeach. Analysis with the University of the Philippines next. This is Bloomberg. Welcome back. You're watching Insight. Philippine Vice President Sara Duterte has skipped an appearance at the country's investigation bureau today as part of an ongoing probe into an apparent death threat leveled against President Marcos Jr. The saga represents a growing rift between the two leaders and their families. Avril has more on this. And Avril, we are now hearing that the NBI, the Bureau of Investigations, will actually go ahead with this probe.
Yeah, indeed. The Bureau is saying that it will kind of review things and then make its recommendations in early January to the Department of Justice. And this is after Sara Duterte skipped another appearance at the Bureau. Of course, if you haven't been following the political drama in the country, this is really a culmination, I suppose, of this public feud between the vice president and the president. They've been clashing over a range of issues recently, including on constitutional reform, the high-profile arrest of a Philippine pastor, and things really came to a head when the vice president is said to have made an assassination threat that she would have the president assassinated if she herself were killed. So essentially, she's being hauled into the Bureau to kind of explain that threat. And of course, this is worth noting because it's 2 years after they came together, joined hands on a unity platform to win the election. So it's quite startling how the relationship between the vice president and the president has just all but broken down. And also keep in mind how these are descendants of really powerful political dynasties in the Philippines, the children of two former presidents. So it's just, you know, quite something to see how things have progressed there. Sherry?
And she's also facing 2 impeachment complaints, right? What can we expect here?
Yeah, so these 2 impeachment complaints have come in the past week, and they are related to bribery, corruption, misuse of public funds. The House of Representatives will soon have to decide whether they want to dismiss the complaints or put it to a vote. And if the House of Representatives indeed puts it to a vote and they get a third of support from the House of Reps, then it goes to the Senate, which ultimately is the sole authority in kind of deciding these impeachment cases. But many have already pointed out that the Senate itself might not want to see a conviction of Sara Duterte because the midterm elections are coming up and she remains popular in the country. They don't want to risk antagonizing her supporters. And I guess to that calculus, we've also seen how Marcos seems to have wanted to distance himself from these impeachment complaints. And his office pretty much said, you know, it's got nothing to do with us and that any impeachment proceedings are going to be a distraction for more pressing issues at hand. Sherry?
And perhaps a distraction for markets as well. I'm assuming that investors will not be liking this political standoff?
Yeah, Sherry, I mean, it's really interesting how we've seen markets and businesses, they've pretty much shrugged off the political drama in the country. They seem to think that this is business as usual in a way, but it does beg the question for how much longer, especially if this political turmoil drags on. And it's coming at a really tricky time for the Philippines when it's having these daily threats from Beijing in the South China Sea. There's uncertainty next year surrounding Trump's policies, and economic growth in the Philippines itself has slowed. So it begs the question, now investors might not think it's that big a deal, but for how much longer, Sherry?
Yeah, April, stick around because our next guest has written about political violence in the Philippines. Iglesias is assistant professor of political science at the University of the Philippines. So great to have you with us. Let's talk a little bit first about the impeachment proceedings against the vice president and what these threats of violence will do in terms of actually investigating potential misuse of public funds.
Well, I don't think that the threat of assassination will impede the impeachment process. If anything, it might galvanize members of Congress to proceed. They are up against the clock because elections are coming in May. And that means that the present sitting Congress their term will end by June. And that the same goes for half of the Senate. So if this impeachment process is to proceed and conclude, they'll either have to do it before the election cycle or in the next. The impeachment pleadings will need to be refiled in the next Congress.
The May 12, 2025 polls, how much at stake is there here? As we continue to see this, perhaps, can we call it a proxy battle between two very powerful families? I mean, it's really very dramatic, the latest developments in the Philippines, looking at what's happening right now from overseas.
Yeah, so I think that if they do proceed with impeachment during this cycle before the elections, of course, it's going to be pretty dicey for some of the candidates, especially those for the Senate. And there are quite a number of sitting senators who are up for re-election, and they might be, on one hand, they should be weighing the merits and demerits of the case itself. If Congress impeaches Sara Duterte and sends the impeachment to the Senate for trial and final decision, but they might be calculating on the basis of are they going to need votes from the south of the Philippines, especially, or the broad sort of base of Sara Duterte, based, of course, on the popularity of her father. But having said that, I should note that Sara Duterte's popularity has also been slipping in recent polls. And, there's also something to be said for the power of the incumbent. Clearly, this unity between Sara Duterte and Marcos Jr. has collapsed. It's been a slow motion collapse over the past year or so. And as the incumbent, if Marcos Jr. Overtly or tacitly supports the impeachment, then politicians may also calculate that they will have support from the sort of political machinery of the president in the coming election. So they might calculate things that way. But overall, they should be looking at the merits and demerits of the impeachment case if it comes to that.
Professor, what is your sense of how it might ultimately go on to shape the midterm elections?
Yeah, so it won't necessarily have a huge impact on local races, and that means that these are the races in the lower house, which we've seen a number of members of Congress, particularly the committee that has been the committee that has been looking into the vice president's expenditure of funds, both in her office as vice president, as well as her office as former secretary of the Department of Education. And they have found, quite a number of startling things that were highlighted by the Commission on Audit. For example, her office spent 125 million pesos. That's about, 2,000 euros. 2 million euros in the course of 11 days. And then when they dug deeper into these investigations, they found that they were very badly documented. People who don't exist supposedly received the money. So there's been a lot of questions of potential corruption. And this, in fact, has been the basis for the impeachment filings.
And this, of course, all happening at a time when we're seeing investigations also into her father, Rodrigo Duterte, right?
Exactly. Yes.
One of the key contentions between the two families has also been this really divergence when it comes to foreign policy as well, their take on China. We continue to see these tensions in the South China Sea. When it comes to broader Philippine economy and just managing the country and its diplomatic affairs, how will all this political noise affect that?
Well, so the big shift during the Duterte administration was a more close relationship with China. Ferdinand Marcos Jr. has sort of reset that kind of orientation back to our conventional allies in the West, meaning the U.S. and, let's say, the European Union. So, there has been a lot more pushback from the Philippine government against China on this score. But more to the point, though, is the slim possibility that this feud between the Dutertes and the Marcoses may have domestic security implications. Because already a year ago, and then again recently, the Armed Forces Chief of Staff had to come out and basically say, warn against any kind of mischief, maybe that might be sown, in terms of trying to mobilize soldiers for a coup d'etat against the government. I think that this is unlikely. It doesn't seem that the Dutertes will actually be able to mount such an attack. This is all still sort of very, very speculative. There have never been any, clear details on whether or not this was a real threat, just insinuations and implications. I don't think it's likely, because the Marcos government did invest quite a bit in a shakeup of the security sector past year or so, particularly, of course, the military and in the police.
As Sherry was alluding to, the way the international community, I think, has been viewing this is perhaps that it's still quite business as usual in the Philippines, but this is a really extreme development, right? These death threats, apparently against the president. What is your sense of whether in the Philippines, is this being viewed as normal at all?
Well, unfortunately, violence has been a feature of Philippine politics in local elections. And of course, we've had a very prominent assassination of Ninoy Aquino Jr. in 1983, which, many believe the former President Marcos Sr. was responsible for. But these threats that have been made by Sara Duterte, they are quite unusual and beyond the pale in today's politics, where we haven't really seen this sort of national level assassinations anymore. Political violence has actually been on the decline to a large extent in local politics. So, of course, it's disturbing and unusual, and especially if it leads to further destabilization. On the other hand, I have to say a lot of political analysts have also just been making jokes about taking out the popcorn and watching as the Marcos-Duterte feud has been ongoing, in a sense. To denote the sort of, it's business as usual.
But
it's just really a lot of noise.
But this is really fascinating watching, as I said earlier, from overseas. And I gotta say, I wonder how international investors are feeling about this. Is there a concern at all that this could also deter private investments, not to mention, of course, delay fiscal economic reforms?
Yeah, well, yes, of course. I think that there should be some concern, but mainly in the off chance that this becomes a lot bigger and deeper in terms of a real, conflict. The more normal sort of way of resolving this is really through the impeachment process. We've seen impeachments happen in the past. We've impeached the president before in 2000, 2001. Well, the proceedings were interrupted by sort of street protests, but nonetheless, it was former President Estrada at the time. He resigned. We've also impeached the Supreme Court Chief Justice in the past. So, this has been leading towards impeachment, I think. Since the Duterte-Marcos alliance started unraveling, we already a year ago heard this issue of potential corruption and how she's been spending the vice president's office's budget, particularly the use of confidential funds. without any real accountability. This has been an issue for over a year now, since questions over the audit report came to light in Congress during budget hearings. So, as long as the impeachment process goes forward in a normal sort of way, then I think it's that business as usual theory might be, we'll see more and more evidence of that.
Yep. So, Iglesias, we'll have to leave it there, but thank you so much for your time. Assistant Professor at University of the Philippines, Diliman. And coming up, political noise here in South Korea as well. Family-run conglomerates or chaebols could face fresh investor revolt amid the potential ouster of President Yoon Suk-yeol. More on today's Big Take next. This is Bloomberg. Here in South Korea, we're headed for another potential impeachment vote as early as Saturday against President Yoon Suk-yeol. And the Korean Metal Workers Union is staging a 4-hour strike today, pushing for his resignation. The union's international executive director, Hae Won-chung, told us why it's decided to take action now.
The reason for the strike is in response to what the union calls a political coup d'etat by the Yoon and the pro-Yoon forces. Also, the ruling party blocked the impeachment motion that was going through Parliament last Saturday. So workers feel that, in order to step up and preserve democracy, in order to defend workers' social and economic status, that we need to take action. So,
but why are you going to take action instead of, say, other workers and other associations around the world?
Well, the identity of metal workers in Korea is strongly intertwined with the building of democracy in the 1980s. So we had a long series of military dictatorships. And in the 1980s, there was the June struggle and the strikes from July, August, and September that eventually closed the military rule and opened and ushered in the era of democracy. So many sacrifices were made by workers in order to usher in the Sixth Republic, the Democratic Republic. So it takes a long time to build democracy, but in the blink of an eye, people who are not paying attention can find themselves under military rule again. Seeing how fragile democracy is, we are asking our members to step up to defend democracy and also to defend workers' rights. We should add, Yoon has also, among the 25 bills that were passed by Parliament that he vetoed, one was a bill called the Yellow Envelope Bill, and that was to guarantee subcontracted workers' rights. It was a bill that was put in Parliament by petition of the people after a big strike in the shipbuilding sector.
What happens if Yoon is not removed? Because right now the proceedings around the president seem very murky at best.
Yeah, so this is the second reason why we're going on strike. So what has happened is that Yoon has sort of anointed his successor to be a party, his party, and the prime minister, who was one of the cabinet members supposedly present in the decision to impose military rule. So basically, the coup collaborators are now this is what he wants, to have the coup collaborators run the government, while simultaneously he still seems to be holding on to the reins of power and appointing new people to office. So this is a reason why it's very important. Democracy rests, the fundamental premise of democracy is that the power of the government derives from the people. And so by workers stepping up and showing, we do not accept this arrangement, step down now. We do not accept someone who is, traded our democratic rule for military rule to continue to be the commander-in-chief of the armed forces. So I think either the impeachment motion on the 14th will pass, or Yoon will have to be stepped down in response to the candlelight vigil protests and the protests of workers and people.
And the potential ouster of Yoon is likely to supercharge the investor revolt against the country's richest families, known as chaebols. Bloomberg's Yu-Kyung Lee joins us now with more on today's big take. So, Yu-Kyung, I mean, these families have been the economic backbone of the economic miracle of South Korea, right? How could they be affected by this political standoff?
So initially, in the aftermath of martial law decree last week, there were concerns that some of the corporate reform initiative pushed by the current government could be undermined because of this political turmoil. But now, actually, investors are more hopeful that South Korea would have a more urgency and greater initiative to push through the reforms. One of the big reasons is that the opposition is going to emerge probably stronger than ever after this political turmoil, and the reform initiative pushed by opposition is much sweeper and much larger and stronger. So, including some of the key legal changes that investors are looking forward to, and which would help improve corporate governance at some of the key chaebols. So, investors are much more hopeful now than ever.
I mean, you and I have been speaking to all of these government authorities, not to mention also the opposition party as well, with the leader Lee Jae-myung, and everybody seemed to be on the same page of wanting more reforms, more openness, changes to capital markets as well. But these conglomerates have been there for decades. They're so powerful and influential. What's the extent of their influence right now in Korean society and economy?
So they have been the backbone of the South Korea's economic growth, and that they are probably the reason why South Korea has Asia's fourth largest economy. So their influence is goes far and beyond. But one of the corners we can see their big influences in the areas of M&As. It's one of the areas where investors and shareholders have been persistently complaining that a lot of terms are often not in the equal term for minority shareholders. But now this year, I think we are seeing for the first time that retail investors, shareholders, and even the policymakers joining forces to ensure that some of the terms during the M&A are equal and fair, regardless of regardless of the shareholders.
We have seen some battles in some big companies already, right?
Yes, one of the cases that we have seen is the South Korea's oldest chaebol, Doosan. They have scrapped some of the M&A plans because that faced strong opposition from shareholders, and also regulators have intervened. And we haven't seen this before, and oftentimes M&A has been used to increase the control of the founding families, but it looks like that's going to be a lot more difficult from now on because we have a strong opposition from shareholders and also by the policymakers.
Of course, South Korea has always been plagued by what's called the so-called Korea discount. Just quickly, can we expect that to get better next year?
Well, it's not going to go away overnight, but we'll see about the changes coming. We might be at the start of the sea change right now for the South Korean capital market, so a lot of people are very hopeful.
Yu-Kyung Lee of Bloomberg, and of course, she just had that big take, so do go check it out on the terminal. If you're a subscriber, it's also on the Bloomberg.com website as well. That's it for Insight. Horizons Middle East and Africa is next. This is Bloomberg.